We are live, ladies and gentlemen. Thank you for being here today. It is Friday, the 13th of March, and what a wild ride it has been so far. Some of the biggest drops in Bitcoin's history we saw in the last 24 hours. And for those of you that were trading that, congratulations. That volatility is exactly the reason why people like trading, not just in these markets, but in the traditional space as well. So what we're going to do today, and I hadn't got a chance to really go over this stuff in our previous videos, which is talking about hedging your portfolio value while trading. So today we're going to look at where we think the Bitcoin bottom is. I don't think anyone should be trying to catch knives here, but if you are a fan of volatility and you like trading, this is a fantastic place to be doing just that. So we'll go over and we'll share a little bit of our sentiments about what that looks like and how we think one can take advantage of it. For the first time in a very long time, I've actually been watching the 1 minute chart. So for those of you that's showing up to the show, smash that thumbs up button. If you are enjoying the content, let us know that everything is going smoothly. Again, remember to leave your thoughts and comments and questions for anything down below as we go over our thoughts in the process today. So again, remember, a lot of this is going to be freestyle. What I like to do is just generally go over what I think is important, both on the short and intermediary timeframes. So we'll fire you over this here so you can see the charts that we're looking at. And here's Bitcoin on the 1 minute chart. I have not watched Bitcoin in the 1 minute chart in a very long time. And I don't normally suggest you do this, but in these very, very quick moving situations where fundamentals and technicals are having this chaotic dance together, what I want to do is I want to slowly zoom out and take a look at what's happened over the last 24 hours. So now here we see Bitcoin on the 24-hour chart. Now, for those of you that are in the private Telegram group, you would know that we went short at around 7,600 here, and we capitalized off this. And actually we got really lucky. I'm going to say lucky. We closed our short at 4,400 last night-ish, 4,450, 4,413, somewhere between there. And we caught a lot of this ride back up. I went short again this morning. So this is how I'll show you guys where I was and why I'm watching on the 1 minute right now. So here on the 1 minute, we saw some of our favorite patterns start to take place. And I've been charting and trading with again, I'm under the current operating assumption that things are going to continue downwards. Bitcoin may go as low as $1,500. We still may see that B-wave conjecture that we had spoken about so many times in the private group, which is that there was still the downside to $1,500 versus the upside to maybe somewhere of 100,000. So the downside risk never changed. We just didn't know what might cause that downside risk. So we saw this ascending wedge, which is a bearish pattern, and then that broke. And then we saw a broadening a broadening wedge down here. We opened a short here and we closed around here, and I opened a short right at the break of this line as well. So all I'm trying to do here is hedge and basically save the portfolio value. So yes, the account is going up in Bitcoin, but right now what you want to do is keep it stable in US dollars. I hate to say that. We all know how much I'm not a fan of fiat, but currently that's what people accept in the broader community. And I had many times over said that I didn't think Bitcoin would do really well in these circumstances, even though it is a hedge against the failure of the economic system. It's not the economic system right now that's failing, it's the culture and the sentiment. People realizing they might have to stay home and deal with remote jobs and social distancing, losing loved ones. This is all the time when people are going to be taking out what would be considered a risky asset. Almost anything in the S&P 500 and Bitcoin is included in that basket of risky assets. It is a hedge against the failure of the banks, which may happen eventually. So do make sure that whatever you're trading, at least in terms of hedging your bet, is not your whole portfolio. It's just used as an active management to not lose so much of that value and increase your Bitcoin holdings along the way. So that's what I've been doing. I've been going short with a small amount of leverage to hedge the bets on the rest of the portfolio. And it's worked out quite well. Again, it's not saved the entire value, but it's done well enough. And that's really dependent on everyone's, your basket. There's somewhere around 30% at 5 times leverage should be able to cover X amount of dollars. You have to do your own homework and play around. For those of you that haven't traded, just learn by putting some money in those places and that you're going to lose it. So maybe only play with $100 in Bitcoin if you're going to short or long, and lose it, close it, open a position and close it, open a position and close it. Know what you're doing and know how to make those positions work effectively for you. And that's one of the things I think that doesn't always happen, is that we get caught in this kind of this like deer in the headlights situation where we've never traded like that before, so we just don't do it. It's better to take that small risk, say with $100, and figure it out. Learning is always going to cost you money. The fear that you have of losing $100 versus a $10,000 short or something is significantly different. The risk is not convex. You're not putting so much on the line. So playing with that $100, you could use that as just a daily active lesson and know that that's about what it should probably cost for you to really have a confidence around it, and that no one can give you that confidence either. The only way that that confidence is acquired is through that type of trading. So right now on the smaller time frames, what we're seeing is just such a quick moving scenario here. So what we'll do is we'll keep a close eye on this. So I want to actually frame back here for a second. I'm going to give you guys my face, and I'm going to do something in the background. Again, what you're trying to do here is mostly just hedge your portfolio. So understanding again that you're making money in these situations, definitely possible. You could have gone like exponentially short on 100 times leverage and killed it, but it's such a risky move. Here, we're not trying to make risky money-making moves. We're just trying to hedge the portfolio value and make sure that whatever is coming through in terms of value on our trades is not lost. And that's an important part, I think, that a lot of people overlook, is that sometimes in these situations, it's not just profit, but just maintain value in your portfolio. You know, there's a lot of people that are going to need that extra cash instead of just watching it fall dry. I saw some people who were supposed to be good traders said, I'll never sell Bitcoin. It's like, well, what the fuck are you doing? You have volatility on the upside and the downside. And this is what we know for a fact, a volatile moment to the downside on unprecedented levels, right? When you look at where Bitcoin's closed here in the last 24 hours, it's unprecedented. So why would you not take advantage of those swings? I think it's very. It doesn't make a whole lot of sense. People don't make a whole lot of sense. They want to stay married to Bitcoin like it's their life philosophy. And well, I understand that. The reason I have a portfolio is so that if I need it, I can spend it on shit like maybe I got to pay for the doctor bill or something, right? And that's important. I think most people think that way, that these extra assets are probably not just for, so I have more money. Your health is worth more, so that if anything goes wrong, you have that potential to take care of yourself. And again, I want to go over here, and I've said this before in my last few shows, nobody owes you anything. It is up to you to be able to take advantage and make these preparations for yourself ahead of time. I think quite often what happens is we get stuck in a victim mentality. It's like, oh, well, you owe me this or some shit like that. That is not how this game works. I've lived in the jungle for long enough to know that nature does not owe you shit. And that's important because now you have to rely on yourself. Look, imagine you get to the end of the video game, right? Pretend life is a video game, and you realize that nobody knew what the fuck was going on at all. So it was up to you to figure it out as best as you could for you. And that was the best way to do these things. And I think a lot of the times people expect that someone else is going to tell them what to do. And it's one of the reasons why I think we've failed fairly miserably at stopping this virus before it got out of hand. So again, I'm watching on the 1 minute chart here with Bitcoin because this is a spot where you can make trades. I went short here, and I'm still in that short now. I went short there, and I normally don't trade on these minute times. It's just there's lots of volatility both to the up and down side, so they're not huge gains. But again, it's just this is insurance. If Bitcoin drops down to $1,500 all of a sudden, I'm insured, right? My stop losses is very, very tight off my entry here because I'm not trying to make money. I'm just trying to secure the portfolio position. So if it breaks that stop loss and it goes in the opposite direction of the trend that I was paying attention to, bottom of the wedge, this is a beautiful broadening descending wedge. So you can go broadening descending wedge. I don't have this written yet. That's not how descending wedge. I can't spell apparently, guy. And then there was a broadening one. I don't know why. Maybe my keyboard's. I'm gonna blame that on my keyboard. My keyboard's broken, guys. I swear that's why I can't spell. So here you have a broadening descending wedge. We posted this on Twitter the other day as well for Bitcoin when it has done it before. So these quite often play out just as you might expect, and you could take advantage of that. And on the short term right now, it's quite nice. So if you don't follow us on trading or on Twitter or TradingView, do that now. Here you can see the last broadening wedge we were looking at, and this is what it looks like. You see an A, B, C, D, and then halfway through that target. And that's exactly what we saw here. A, B, C, D, and then halfway through the target. And then we took off. And then it's usually always to wave B. So here, if you look, the target is to the top. Other time frames in this chaos to your advantage. I would normally never trade these positions on a 1 minute time frame. It's just, it makes no sense. But when you're in such a chaotic, let's say, panicked state, I'm not panicked, but when the world is feeling the panic, and as it should, this is a pretty big deal. Again, not that, look, there's the difference between, I think, informed panic and uninformed panic. If you're if you know what to do and you feel that panic and that fear set in, you'll start to make preparations. If you don't, you'll do dumb shit like just go buy a bunch of toilet paper because you're not well informed. And that's what I think we're seeing right now, sadly, is an uninformed society. So here in the 1 minute, let's take a look. What kind of position are we seeing take place now? So again, I would never normally chart like this. This is once in a lifetime situations right now, and this is what we're seeing. This is where the bottom of these candle wicks have gone to so far. That's all we're going to do. So right now, what we'll do as a kind of a thought experiment, let's see if this makes another broadening descending wedge, which I believe it will. I think right now we've had a lot of people who have said in the panic, like, okay, I'm just going to wait it out. It bounced up 20% drop, 36% drop. Fucking crazy. And then a massive 53% gain back upwards, right? And then you, again, within a very short period of time, a 15% drop. So this type of volatility is the reason why I'm watching on the 1 minute, is because I want to take advantage of it. I want to try to make use of this time, and it's happening so quickly. So it actually looks like we might get another broadening descending wedge. So here is a perfect example. I'll explain to you guys, for so many of you have asked how you use the bear claw. So the bear claw is a free trading indicator that we give away. It's this stacked EMA followed by your two simple moving averages, the 200 and the 314 on the outskirts of that bear claw. The outer edge of the claw is what I like to call it. And in the middle of the claw, you have the 21 simple moving average as well. And as you can see, the 21 is actually marked as and even on the 1 minute right now, it's marked as the support of the areas that I either close or open a trade based off the degradation of that 21 moving average on the 1 minute. So right now, I suspect we're probably going to come up to the top of this 21 and then fall down. If not, we'll test even the top line here at around 522 for this broadening wedge before coming back down one more time. If we break above the 21 moving average on the 1 minute and hold above that, we could go higher. But more importantly, it's this line up here. And if I actually lower this line down, guys, because you can be, I mean, when you're charting trend lines, you can actually be flexible, right? So you can see that the trend line might actually come down to here if you're charting the volume instead of the wick, right? So you could tighten up that broadening wedge. Now, again, it's not as beautifully defined as the one we had over here the other day on Twitter, which was like, this was a perfect example. If you see these two side by side, A, B, C, D, halfway down out of the channel, and then it broke exactly to the top of B wave on Bitcoin as well. So normally you don't get that, but here we go. Back over here to the top of the 21 on the moving average, and we're closing above it. So we're definitely going to test this top trend line, right? If we break out of this top trend line, then I definitely think we're going to go back up and test 53.89. If we can't get above 53.89 here, and this is where I think the information becomes super pertinent, is if you take a excuse me, ladies and gentlemen, if you take a close look at how we've interacted with these simple moving averages on the 1 minute, it becomes very important. You know, we hadn't, if you zoom out, we hadn't touched the top of this moving, like we've been breaking down from it. Every time we couldn't get above the outer simple moving averages, we dropped down dramatically. So here we could, once we closed below that moving average, it seemed very, very likely that we're going to close much lower. And even though 6% isn't a huge drop, it is. It's even bigger. It's a 12% drop. Jesus Christ. So this type of volatility, guys, again, this is some of the best times to learn about trading too, because there's so much happening so quickly that you get this instant feedback response that you don't normally get in the markets. The markets are usually a little more boring. Watching on the 1 minute right now is crazy. Look, see, we didn't close above the 21 moving average. In fact, we're having a hard time doing that on the 1 minute. If we can't close above this in the next few minutes, it's going to come down lower, probably around $5,000. So that would put us down here at around 2.44% of a drop within the next few minutes, right? So we'll keep an eye on this. Basically what I'm going to do is I'm going to open up YouTube on my other computer here, and I'm going to see if I can answer guys' questions along the side here too. So I apologize for the coughing. I've had the same little cold for the last little bit, It's been a little bit difficult. I don't do I know how to use this thing? Um, let's see here. I can't even find the live stream. Maybe I need to refresh it, guys. So again, we're watching this 21 area right here. Oh, let's draw ourselves a little circle so you can see it. So this purple line here, I could actually remove the bear claw, and the 21 moving average will appear more steadily. There you go. So this purple line is the one that we were watching, and see how we didn't close above it? That's likely going to push us down to the bottom of this wedge. Now, once we come up to this wedge, if we make a halfway stop, don't come back down to the bottom, we're going to continue and likely come back up to this B wave, right? Same as before with the broadening descending wedge, which would be around 5,200. So what's nice is, again, if you start watching the markets in real time like this, happens so rarely, but at these particular moments you can do it, because there's so much volatility and chaos at a single moment. So I'll take a look at you guys' thoughts here. As we watch, I think Bitcoin's going to hit the bottom of the wedge here too. So it's a 2.4% drop. Who are you kidding? Financial system is failing. We're all well, the financial system is failing, yes, but I've long since speculated in the beginning of 2016 is when I changed my assertion about this, is that because there's so much intellectual capital locked up in the minds of humans, you can probably print a lot more money than people would ever recognize and not really hit the same levels of inflation, because in some sense or another you do get a trickle-down effect, and that money does go into the economy around the world, even though it's not direct stimulus as per se. It's like, oh, we just gave everyone $1,000 or something and they're going to spend that, which does increase economic activity. We've actually found this out from charitable efforts, that if we give people money instead of buying them the supplies they need, they increase their economic activity. And that's what currency is used for. It's meant to increase economic movement, right? Whereas money is a bit more of a stable form that you'd want to keep for a long time. And Bitcoin has been acting more like a money, although obviously with this drop, that's not the case. Nothing. Gold's got hit, all the stocks got hit, every asset got hit, but people can still spend cash. So the system has failed. Yes, I 100% agree with that. But I think our ability to misunderstand how much value is locked up in the minds of people versus in inflation itself is the real kicking point for me. That's where I think it all started to change. So here we're watching the 21 moving average and see will we close above it? These are the questions I would be asking myself, right? So that you get to see what this looks like, how the bear claw works on a very short time frame. There we go. Will the volume stay above the 21 moving average? That's the big question right now. So I'll keep taking a look at your guys' thoughts as we kind of watch this play out live here. Yes, Bitcoin is still a fantastic hedge against the failure of the dollar fiat system. Whether it was created exactly for that, hard to say. The financial collapse of 2008 was not just because of money printing and had a bunch of other bad derivatives and loaning and blah, 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 blah. Money is a fickle situation. It doesn't have to be valuable the way we perceive it to be. We used to use shells because it was just a modus of, hey, thank you. So here we go. Look at this. Halfway close. There, to continue the broadening wedge, right? So let's map this out. Let's take a look and see if it's going to close the same way. So here we go. We've got the descending broadening wedge. It comes down, hits the bottom, it goes up B, down, up D, and then either here on the E or the next wave, it'll only go halfway and then continue up to the B target. So let's take a look if we can see that now, and I think that's what we're actually witnessing. So we're going to go A, B, C, D. So here comes down A wave, B, C, D, and then here half stop, boom, closing above the 21, right up to the B wave top, pretty clearly as far as I can tell. So again, what I wanted to do here was use to our advantage the volatility in the markets right now for these fairly big moves to again educate myself and share with others what I've seen happen time and time again with these markets. So we're going right to the top of the B wave, and will we get above that? If we close above the B wave, again, remember, we might see a target if it recomes and tests back down to the bottom of the B wave and goes back up or not, right? So we have two possibilities here. Will it close and come back down to test that B wave approximately at a technical analysis looks like on a very short-term basis, because normally you can't trade on this time frame, but right now with all the volatility, it makes it, let's say, easier to do so because you're watching a heightened amount of people's emotions in a very short time frame. So it does look like we just completed that broadening wedge. right here, A, B, C, D, halfway down, and then back out. Now, if we can't close above that B wave, we're definitely going to come down again, right? And that's important to understand, is how this stuff works. And right now, you can watch it happen in a very short period of time. So here was the last broadening wedge that we looked at just earlier this morning, not more than a few hours ago, right? So it came in A, B, to the top of the wave, C. See, this is a little bit of a broken wedge here. So you could probably move the C wave over and the E wave to here. I would put the C wave here and the E wave here, the halfway up the triangle before the breaking out. So again, it looks like we're going to actually close above this on the broadening wedge that we're looking right now at above 5,222, and then we would see a continuation of the wave probably up to around 5,370. If not, again, this is what's fun about watching on such a short time frame right now, is it really gives us like instantaneous data, something that would be really, really difficult to do. Depending on what happens, comes out of the news. The fundamentals that I would normally never pay attention to are going to be leading indicators. When Trump came out and said there was a travel ban, I was like, well, I'm going short. Because it's not a good sign. I don't give a shit what the technicals say. The fundamentals broke any technical capability, but in this interim moment, these technicals move so quickly. This is one of the best times to be learning and educating yourself about what this looks like on these time frames, because you just don't get opportunities like this often. This is a once in 100-year event that we're watching right now, and you can watch the human emotion express itself very quickly on a rate that you normally never could, just because of the heightened aspect of this event. So I'm going to scroll over. I'll give you guys my face for a little minute. That way I can take a look at your questions and your thoughts. We'll go from there. Again, I still think that there's potential for Bitcoin to go as low as $1,500 here, so I will be watching these markets very, very closely. Leave your thoughts and your questions in the side chat, and I'll go over a few of those. Hell yeah, $1,500 is in play. A lot of people aren't working for the next 30 days. Yeah, I agree. We have to remember the fundamentals here have changed. Michael says, waiting for Trump's announcement at 3 for the market to die. Keep a close eye on any public addresses that are made. I agree with that. The only place will be on TV again. They say something important, most likely. They do post that stuff live on YouTube. You can watch like Fox, NBC. The live public address that Donald Trump gave was done on YouTube as well. NBC posted it there. So if you don't have TV, you can watch this stuff on YouTube as well. You just have to be up to date by, I guess, following the markets. Like if you'll see someone will post it on Facebook, Twitter, you kind of got to be super active for the next few days. Anyways, I'll leave it at that. It's a long enough show today. Let's tea with the Arcane Bear. Keep a close eye on the 1 minute. Watch these. Try to chart and trade them. Well, don't try to trade them. None of this is financial advice. At the very least, try to watch what happens and see if you can guess what it's going to do next, because the volatility in these markets is so profound that this is probably one of the best times to be learning about technical and trading analysis. Find out what those moves look like. Find out, is this a broadening wedge, a descending wedge, or is it an ascending triangle, right? This is very, very important. And I think you can learn a lot from these times like that. Last question I see on the side here is dollar cost averaging and hodl approach a strategy and a good play? If you need that money, no, it's not. You would want to make sure you have enough cash to be able to play your game, whatever that might be. So I wouldn't suggest it. And as you can see right now, for those of you that have your Bitcoin chart open, actually I'll scroll over and I'll switch it up here. Bitcoin is just closed above that, and it looks like it's about to make that secondary wave function. So again, what's important there is seeing how that works in the short term. Anyways, this is Stu with the Arcane Bear. I'm going to sign off for the rest of the day. If something crazy happens, I will go live again, and then we'll jump in from there. I think it's important. And have yourselves a wonderful day, ladies and gentlemen. I wish you all the best. This is a beautiful time to be watching the markets and learning. So we'll see you guys again on the other side. Ciao.